but we operate across the region, actually expanding into the Middle East now and into the South Pacific. And I think this is a really exciting time to share a bit about open finance with the attendees here, given that the ADFIAP yesterday approved a market assessment for open finance. And I think that is a brilliant initiative, because I think what's missing from the conversation in open finance, which is mostly a European and US and Australian conversation, frankly, is that actually open finance can be a lever for financial inclusion and access. So what I want to do today is share a bit of the real-world use cases of what open finance is actually looking like in emerging economies like the Philippines, like Indonesia, like Vietnam, like Saudi Arabia, with some examples from developed markets as well, and share a bit of what open finance can do for development institutions in Asia Pacific. So a little bit about me. I'm the co-founder and CEO of Brankas. We were launched in 2016, backed by venture capital firms, basically fintech and impact investors in Asia Pacific. And then I participate, and Brankas leadership participates in a number of fintech and open finance initiatives around the region, like Open Banking Exchange, the APIX Exchange in Singapore, which is an MAS initiative to promote fintech API development. And we help facilitate some of the BSP initiatives related to open finance as well. So before I go into the specifics here, I think many of you will be aware, but open finance is really addressing fundamental problems of infrastructure, access, and affordability. In Southeast Asia, for example, 60% plus are unbanked, and even among those that are banked, they're likely using their bank account just for payroll and moving back to the cash economy every payday. We have low card penetration, so actually the online payment rails have really not been solved, really across the region. Things like retail account opening and loan origination take weeks to set up, and there's really no reliable, up-to-date credit bureau. You know, as an American, there's no FICO score you can ping and just get a real-time estimate. So of course the attendees here are dealing with the challenges of accessing verifiable credit scoring data. So a couple principles here. Number one, customers own their financial data. So customers should be able to share, upon their consent, data with an institution, whether they are comparing, whether it's an SME doing reconciliation to manage their finances better. The other piece is customers should be able to link their accounts and access their financial products outside bank-owned channels. Or the more cynical way to say it is, you know, I as a customer should not rely on banks building software in order to access my financial products. I should be able to link those accounts to my SME accounting app, to my ERP system, to my non-bank lender profile so that I can get a comparative loan product. So at least our definition for open finance is it's the technology, products, and policies that enable customers to securely use financial services from third-party apps. Which is a bit of a mouthful, but what it really does is it starts to change the economics of serving underserved populations like mass market consumers and SMEs, particularly in archipelagos like Indonesia and the Philippines, where brick and mortar distribution to a far-flung province with a low-income agricultural population, the economics become very difficult. So by separating the financial product from where you access the financial product, it can actually change the economics of serving these populations and provide a data sharing agreement so that those populations can share verified data for credit scoring or identity verification purposes. So it changes the way financial products can be developed because you can plug in APIs into third-party apps, whether that's an e-wallet or an accounting system or an SME enabler. It changes the way financial products are distributed, and it changes monetization. We're seeing banks like Starling and others in the UK that are basically building an app store or an API store for third-party financial services, and they're earning massive fee income by having a platform where they're distributing those third-party financial services to their customers. So one thing I want to point out, and then I'll go into some examples, open finance is much more than just sharing your bank data. Okay? Open finance is a way of taking financial products, making those available as standard APIs that can be plugged into third-party fintech apps. And then the fintechs can do the heavy lifting for you. They can acquire those customers, they can service the customers, they can provide data back to the bank. So actually open finance, the examples I'm going to share, these are much broader than simply statement sharing, right? It actually is allowing for origination and servicing with a different commercial model. So it allows for payments, of course, whether that's retail, corporate, whether it's domestic or cross-border. It allows for identity and authentication mechanisms where KYC is still very manual and very expensive. It enables account opening, loan origination, card issuance, and all the different combinations of virtual cards and kind of one-time account numbers and PANs that can be used for certain use cases. Even investments in brokerage, where we have companies like Ajaib and Peluang in Indonesia that are providing the first set of retail investment solutions by connecting to online brokerages. Okay, so let's look at some examples. First, we will go to Singapore. So this is SG Findex, where they are allowing a very basic bank-to-bank data sharing. So this is the DBS app. Inside the DBS app, I can link my OCBC, HSBC, Standard Chartered, Maybank accounts, and I can see aggregate balances and transaction history. Now, this is a very nice, convenient feature. It's not very commercially viable. It's not very interesting, frankly, but it is certainly a starting point, and it's usually top of mind for, account information services, which is how the Europeans call it. A little more interesting, I would say. Last week, CRIF and Brankas, we launched a alternative credit scoring engine based on CRIF's AI-based scoring models, but using some of that bank data. So now banks and non-bank FIs can access open banking aggregated data and produce immediate credit scores. So it's a little bit better, kind of packaging that data a bit more than simply aggregating balances. But I think it gets more exciting. So account data aggregation is also valuable for corporates. Brankas in Singapore, for our Singapore accounts, we link to Xero, which is an SME accounting platform. So our finance team at Brankas, instead of needing to download CSV files, reformat them, upload them to Xero, then do manual reconciliation, we get an automated data feed, and that reconciliation process is 99% automated now, because we're getting the transaction feeds coming into our basic ERP. Moving on to payments. So this is an example here in the Philippines. This is the GCash e-wallet. So this is the most popular kind of consumer e-wallet here in the Philippines. I can now link my Union Bank or my BPI bank account into the GCash app, so I can do one-tap top-ups and pull funds into my e-wallet. Some of the digital banks use this. There are more and more pay-by-bank options for e-commerce as well, which is a huge benefit for e-commerce merchants, large or small, that are used to paying 3 or 4 or 5% off of their top-line revenue and waiting 7 days for settlement, right? This is an instant payment directly to the merchant's account and very convenient for the user as well. Oops. Yeah. Okay, account opening. So this now starts to get a little bit more interesting, and I think more from a banker's perspective, you can build more of a business use case for it. So also in GCash, today you can open retail savings accounts from CIMB, which is a regional bank here in the Philippines, and BPI as well. Now what's interesting about this is, number one, I can basically open a new account through my GCash app in about a minute. There's a couple additional AMLA questions, but you can basically link that in a minute. And then you have your basic account view. You can move funds back and forth. But really, the user flow is, eventually I will download the BPI app or CIMB app and then use the full suite of services, and then they can upsell me. But think about the difference in acquisition costs. But for BPI to open a new branch, run an online campaign, set up kiosks at the mall, versus having an API that connects into GCash's 60 million users, several of whom can then open an account within a minute. One more thing about account opening, they're using GCash's KYC. So if I am a fully verified GCash customer, where I've shared 2 IDs, I've done the facial recognition and liveliness check, I can actually bypass KYC requirement, not bypass. It is the bank using KYC as a service from GCash, so that they can already verify. Now, I believe after a period of time, you have to do some kind of re-verification, but think about the friction that's reduced versus the 2 weeks and paper trail that'll have to require if I visit a branch to open an account. So these are some of the new ways that we're seeing retail banking change using open finance. Okay, Even more interesting, I think, is in Indonesia, where Tokopedia, the largest e-commerce platform, now has a marketplace of merchant financing entirely available via APIs and using the Tokopedia seller data. So if I am a merchant selling my online store on Tokopedia, I basically say I want to apply for a line of credit. I can then see what options are available, and the lenders qualify me based on the types of products I'm selling, my seller rating, how much turnover I've done. I'm already verified as a Tokopedia seller, so I've been KYC'd. And now these lenders, who typically would require a 4 to 5 week process, and also I would have to help them understand what my e-commerce business is all about, I can actually share that verified data back to the lenders. They can score me instantly. They can fund my Tokopedia wallet, and then I can start to buy, and I can go buy inventory and continue shopping. So it's great for the customer who has more selection to choose from. It's great for the merchant who has access to basically immediate capital based on their reliability and throughput on Tokopedia. It's great for Tokopedia because they're seeing more volume. It's great for the lenders because now they have a direct channel for offering inventory financing to merchants. Back to the Philippines for a second. So this is getting a bit more radical, but we have a rural bank here in the Philippines called, it's actually the Rural Bank of Romblon, but their brand is now NetBank. This is an entirely banking-as-a-service bank. They do not have an app. They have one branch, which is in Romblon Island, Tablas Island, not very accessible. However, their entire business model is providing infrastructure to apps that want to offer virtual credit card and debit cards, retail account opening, corporate account opening for SMEs like Brankas, where we want to actually manage our payables and our receivables inside our accounting platform. So their entire suite of banking services is delivered by APIs, and the user interface, or how I, the customer, interact with NetBank, is going to be through a third-party app, my accounting software, or a fintech app that's serving my needs. So actually, the way that NetBanks look like is not by having a branch and pamphlets and an online banking portal. It's an API developer sandbox that we've helped them develop, and now they have distribution to any kind of neobank or financial services app that wants to offer banking products underwritten by NetBank inside their app. So it's a very different model for distribution. It's a very different type of customer experience, but actually it makes a lot of sense. You're allowing the bank to focus on what it does best, and then the apps that are really consumer-centric or SME-centric can focus on that user experience. So some other examples, just to kind of look a bit to the future, we have companies like Rails Bank, Solaris Bank, and others that are powering multinational companies. Brankas uses Wise, and our USD balance is actually a balance at Community Federal Savings Bank in New Jersey, which is a bank that I would never have used, I would never be an account holder for, but because we are using TransferWise for our cross-border payments, we are by proxy a customer with a SWIFT account and a bank account and everything for our USD TransferWise balance. So if you want a bit more information on kind of how open finance and the technologies that are addressing open finance in developing markets, you can take a look at our white paper, scan the QR code. This is a bit Philippine-centric, but we're also sharing some case studies from Australia, from the UK, from the US, from Hong Kong. So it may serve as a helpful starting point to understand what are the capabilities. I know it's a short presentation, but hopefully that gives you an overview of what open finance can do for development institutions, particularly here in Southeast Asia. I'll be around later on, happy to answer questions later. In the meantime, feel free to reach out. Thank you so much for the time. Take care, everyone.